If you've been thinking about getting into the real estate market, but you're not quite sure how to get started, or maybe you're in the very initial stages and you might be hesitant to reach out to someone like me, then you have come to the right place. In today's video, I have set out a complete buyer's guide, running you through all the steps, even before you go out to start looking at homes. Everything you need to know is all in this video. I hope you guys find it helpful. And if you guys do want to book an appointment with me after watching this, or as you're watching it and you have some questions that come up, you can do so by clicking the link below where you can book a call with me. If you are finding value in these videos, I would greatly appreciate it if you could hit that like and subscribe button, maybe to help more people who might be in the same situation as you and trying to get into their first property. I will point out that the information I am going to provide you with is specific to British Columbia, Canada. So depending on where you're watching this, just keep in mind some of the costs and processes that we use here might not directly apply to you wherever you might be watching this. That said, if you are in an area outside of my zone of expertise and you are wanting a real estate agent, you can always reach out to me. I have a great network of realtors that I know and trust and that I know will do a fantastic job servicing the area that you live in. My area of expertise is Langley, the Fraser Valley, and the Greater Vancouver area. The Fraser Valley consists of Langley, Surrey, Delta, Mission, and Abbotsford. I do work across the river as well in Greater Vancouver, in areas such as the Tri-Cities and also in Chilliwack as well. Before we get into the action steps you need to take in order to purchase your property, I'm going to back it up and first talk about agency. So in BC, the rules are unlike any other province or even place for that matter, as far as I'm aware, in that a buyer and seller need to be represented by two separate real estate agents. So as a buyer, when you go purchase your property, you should have your own real estate agent that's looking after you and not the seller. So when you walk into a property, that seller will have their own realtor and you will have your own real estate agent. And so before anything even happens and you are chatting with a realtor, they are supposed to show you a disclosure of representation in trading services form, and that goes over agency. So if you are choosing to work with your own real estate agent, and mind you, you do not have to, you can be unrepresented if you choose to, but if you are not represented by a real estate agent as a client, then legally speaking, we cannot help provide you with advice, loyalty, or obligations to you. We can't tell you what to put in the contract or what terms and conditions would be best for you based on your needs. And so you would have to sign a unrepresented party form if you did choose to go in and represent yourself. The seller's agent can write a contract for you as a buyer, but you again would have to sign an unrepresented parties agreement because that listing agent who's selling the property already has a client relationship with the seller. So they can't represent you as a client and the seller as a client. So as a real estate agent, before I can even learn anything about your specific buying needs, I would need to get you to sign that disclosure of representation and trading services form so that I can best advise and help you going forward with purchasing your property. There's a few other forms too that realtors are obligated to get you to sign before writing an offer on a property. If you want the specific details, you guys can click the link below and reach out to me and I can get more into it. But for the sake of this video, really, I just wanted to go over agency and make sure you understand that in BC, you have to seek separate representation aside from the selling agent. So now that you understand what agency is in BC, you should start to think about choosing your real estate agent who will be the one to represent you and coach you and navigate you through this entire process and help make you feel as comfortable as possible when you go about choosing your real estate agent. Some factors to consider is asking them how much experience that they have. You're going to want an agent that does this full time and who is experienced. Even if a realtor has been in the business for 10 to 15 years, but they only sell 1 or 2 homes a year, that's not very good experience. So make sure that you ask them not only how long they've been in the business, but how many homes per year do they sell? Because you, again, want someone that is in tune with what's happening in the specific neighborhood that you're wanting to purchase a home in. Another good question to ask a real estate agent is how many referrals and repeat clients are you getting? Because if they're not getting a lot of repeat and referral, there's probably a good reason why people aren't repurchasing with that particular agent. agent or wanting to refer their friends and family. And lastly, you want to make sure that you get along with this realtor. Do you have similar interests? Do you enjoy talking with them? Because when you are going through the buying process, that real estate agent should be communicating with you on a daily basis, whether that's just to provide you with an update on what homes are selling for in that specific neighborhood for that specific property that you're looking at, just to keep you updated on sale prices, how many days on the market. My point is that you're going to be talking to your real estate agent a lot during the time frame that you are purchasing your home in, and you're going to want to talk to someone that you actually enjoy talking to and that you can trust and have confidence in, knowing that they know their stuff and they are taking good care of you. There's always so many changes happening in the real estate world. The market changes daily, and also our forms and regulations are changing. So it's really important that you choose a real estate agent that you're confident in, because this is the biggest transaction that you will be purchasing. Finances. Now, we're going to have to prepare your finances before we actually go out and look at properties, because you need to know what you're pre-approved for before you start writing any offers. And when I say a pre-approval, yes, I'm talking about how much on paper can you qualify for your mortgage, but I'm also talking about what do you want to afford? Like, what are you comfortable affording? Because sure, maybe you're pre-approved for an $800,000 home, but maybe when you look at the month-to-month costs and factor in other aspects such as your lifestyle, you might not want to go all the way up to the $800,000 amount. Because I personally get a lot of clients that when they start searching for a property, a big fear for them is that they don't want to be house poor. And so we really need to not only look at your pre-approval and your monthly mortgage amount, but also factor in other costs that pertain to your life to make sure that you're in a comfortable situation. When getting your pre-approval in place, you will need a mortgage broker to help qualify you for that loan. Now, you can walk into a bank or you can choose an independent mortgage broker. The difference is that an independent mortgage broker can choose from a variety of different lenders, whereas someone that's representing the bank will only sell you mortgages that that bank is offering. Therefore, you could potentially be somewhat limited on the type of mortgage that you get, as opposed to an independent mortgage broker who might have more of a variety of options and can better customize a mortgage that fits your lifestyle. For example, if you are self-employed, it's a lot different than if you're on a salaried position. So there's a lot of different factors that go into qualifying for a mortgage. If you need any help or recommendations on mortgage brokers, feel free to reach out. I do work with some fantastic local mortgage brokers that I know will provide good service. When you are going through the motions of getting your pre-approval in place, some of the items that broker will ask you for include your notice of assessment, T4, confirmation from your employer that you actually do work at that position, and they're going to verify your salary or whatever payment structure, if you're on commission, that you receive. If you're self-employed, getting a mortgage is more of a challenge because you might have inconsistent income. Banks are not risk takers, so there are quite a few different documents and steps involved in getting your pre-approval, but it is something that you have to do, again, because we need to know exactly what you can afford and what you want to afford before we go out and start looking at homes together. Just a quick note, getting your pre-approval is different from actually being 100% qualified and approved for that specific mortgage. I'm going to get into this in more detail when we go over the buying process, but when you do go and find that home and you want to write an offer on it, we still will have a condition or a subject that allows us between 7 to 10 days, can be a little bit shorter, it might be a little bit longer, where we can verify 100% that you will qualify and that you are approved for that specific property. But a pre-approval gives us a great indication on where we need to land. During your pre-approval, the mortgage broker will also ask if you would like a fixed or a variable rate. Now, the difference is a fixed rate, you are getting that same rate for whatever term you sign on for, whether that's a 1-term fixed or a 5-year fixed term. There's different varieties that you're able to choose. Now, the reason a lot of people, especially when they're buying their first property, choose a fixed term is because they want to know exactly what their payments will be every single month. So these payments will not change because with a fixed term, you are locking in the interest rate rate that's provided to you at that specific time. So if rates go up in the future, it doesn't matter. You are still getting that rate that you sign on the day of your mortgage. Vice versa, if rates go down, you are still getting that same rate that you signed up for the day that you signed your mortgage. So if you're someone that doesn't like risks, I think a fixed rate might be more appealing to you. A variable rate, on the other hand, fluctuates with whatever the overnight lending rate or prime rate is doing. So if rates go up all of a sudden, your payment or the amount that you're paying towards principal versus interest will change depending on what type of variable rate you have, because you're floating with that rate that's posted on that specific time. The benefit with the variable is if rates go down, your payment goes down. Or depending on what type of variable mortgage, the amount towards principal would go up. But on the other hand, if rates go up, your payments go up. More recently, because interest rates have gone up substantially over the last year, we've had people hit their trigger rate. When you hit your trigger rate, this is the point at which your monthly payment is 100% going towards interest only and nothing is being paid down on your principal amount. The benefit with a variable mortgage rate is that if you move and sell your property while you're still within your mortgage term, the penalty of doing so is a lot less than a fixed term rate that you break. So it's usually 3 months interest, but asterisk, I'm not a mortgage broker, and you need to check with your mortgage broker and the type of mortgage that you sign up for and really make sure you are aware of what the penalty is should you move within your term. Now, a lot of people, 60% of Canadians actually move within the term of their mortgage. And I have seen fees be astronomical for breaking a mortgage term for those people that are within their fixed term. So that is one of the disadvantages with a fixed term, is that although you know what payments you're getting every month, you really need to educate and be aware of what the penalty is should you sell within the term of your mortgage, because I'm talking like thousands of dollars for breaking your mortgage. And again, a qualified mortgage broker can help talk to you about these items in more detail, but I just wanted to provide you with a broad overview of the difference between a variable and a fixed mortgage, because you will have to choose one when you do go in and sign your mortgage. Another item you need to be aware of before writing an offer on a property is what is your deposit and what is your down payment amount that's required when you go and purchase that property. The deposit amount is due when you remove subject. So you write an offer on the 1st of the month, you remove conditions on the 10th of the month. That deposit is due on the 10th, or sometimes within 24 hours. Now, the deposit amount is roughly 5% of the purchase price. Now, there's no set rules on this, but the selling agent should be requiring at least 5% down. This deposit amount is held in your real estate agent's brokerage trust account until completion day. That deposit goes towards your down payment. Done up this sheet for you guys, and by the way, if you want any of these handouts or anything, I have tons of them. I'm happy to send them out. They're really good reference guides. So anyway, the minimum down payment, just as a refresher here, so it's 5% down up to $500,000, and then 10% down additionally on any amount between $500,001 to $999,999. When we hit the $1 million mark here in BC, that's when the minimum amount due down is 20%, but that's not always the case. If you're buying a condo for up to $500,000, 5% is due. That's it. So your deposit amount of 5% roughly would be it. And when it comes to completion day, when you normally would be required to top up your down payment, you wouldn't have to, unless you want to and you had an additional like 5 or 10% that you really wanted to put down, then you can for sure. And then, so just on this example of like a $900,000 home, $500,000 is 5%. So $25,000 would be due. And then there's additional $400,000 still left over that makes up the total $900,000 price. So there's 10% due on the $400,000. So it'd be $25,000 plus $40,000 is $65,000 would be required for your down payment, but you'd probably just be putting down the 25% upfront for the deposit amount. So on a $1 million property, a deposit amount you should have set aside should be roughly $50,000. So the $50,000 makes up 5%, and on completion date, you would have to top up that 5% by at least 15%, making your total down payment $200,000. But with the down payment, the sale proceeds from your sale can be used towards your down payment. However, with a deposit, you need that money up front, and you wouldn't have the money from the sale of your home at that time. So you do need cash available up front for the deposit amount. One other part of the financing that I will touch on, even though I'm not a mortgage broker, is whether or not you're getting an insurable mortgage or a non-insurable mortgage. So if you're watching this and you're a first-time home buyer, it's more than likely that you are going to be putting down less than 20%, making your mortgage require mortgage insurance. What that is that if you default on your payments, that gives the lender the ability to go and foreclose on your home and sell it so that they can get their money back. Now, mortgage insurance is worked into your actual mortgage and it runs on a percentage basis. So the higher the mortgage amount, the lower the percentage of you owing. And mortgage insurance runs anywhere between 2.8 to 4%. Again, that's worked into your mortgage, so you don't have to come up with that amount at the time of closing. When you go through mortgage insurance, you actually get a little bit of a better rate. And the reason being is because your mortgage is safer than someone who's not getting an insurable mortgage. Some first-time home buyers have it in their heads. Maybe they were told by their parents that they should wait to save up till you have that 20% so that you don't have to purchase mortgage insurance. However, I disagree with that because if you get into the market sooner rather than later, you're always going to win over the long run. And in more recent times, and what I've experienced throughout my career, is that someone's ability to save up that amount does not surpass the rate at which the housing market is increasing, meaning that by the time you save up to that 20%, you're more than likely going to pay a lot more for that same property than you would have if you bought it previously. Now that we've established your financing, your budget, and your overall level of comfort with how much you're going to be paying for that property per month, and that's not only factoring your mortgage, but also things like hydro, property taxes, perhaps there's Fortis BC on the property, and everything like that, we really want to make sure that we set you up for success so that after you buy your home, you're not only super excited, but you're also confident with your finances as well. It is now time to establish exactly what it is that you're looking for in your new home. I'm talking about getting as detailed as possible so that your realtor can do the best job possible to get you to where you want to be. And based on some of the criteria that you explain to your real estate agent, they should be able to help you narrow down certain complexes or areas that would best accommodate what you're looking for in a home. I always tell my clients, make a must-have list, a absolutely deal breaker list, and an okay, I'll take it, don't really need it, but that's great list. For example, if you would not live on a busy street, put that in the deal breaker comment so that your realtor isn't going to look like an idiot and send you homes that back onto the busy streets in the area that you're looking for. Really try to get as detailed as possible so that your real estate agent can be as efficient as possible and find you the property that you truly are looking for. Things like what neighborhood do you want to be in? What schools are in that neighborhood? Are you wanting to move somewhere to get your child into a certain school? Are you moving somewhere that's close to transportation because you have to work in Vancouver every day? All those things are very helpful for us to know as real estate agents so that, again, we can do the best job possible to match you with a property and a home that would best suit your needs and your lifestyle. Also, think a little bit into the future. How long do you envision yourself at that certain home? Are you going to outgrow it too fast? Maybe you're planning on having a family or getting a pet. All of these things need to be factored into your decision to help you make the best decision possible. During the property search and after you've provided a list on what exactly it is you are looking for in your new home, you would start to go and actually see properties now with your real estate agent. What to expect during this time is that we as realtors on our multiple listing system that we get access to, and the filters and homes that we get access to are a lot more in depth than the online sites that you're probably searching for homes on. So your real estate agent can customize properties that you would be seeing and getting delivered quite well so that you don't have to filter through all those properties on your own. We can make them quite customizable for you. When you do see a property that you like, especially right now, it is important to go out and see that at your earliest convenience because all the good ones go quick here. It's a very popular area to live in, so if a home looks good and it's priced well, I would highly recommend you get out there sooner rather than later before someone else potentially ties up that property and gets their offer accepted, because once an offer is accepted on a property, property, you can't outride that offer. That seller has an obligation to see out that accepted offer. If that offer does fall through, then you can go and write an offer on that property. You can write a backup offer as well on a property. So that means that if there's an accepted offer, the seller can also accept your backup offer. But again, they still owe the first right to the first accepted offer. But if that offer does fall through and you have an accepted backup offer already in place, that prevents someone else from coming in and potentially competing with you, or you potentially losing out on that property. Depending on the size of the property, usually showings for condos are around 15 to 20 minutes. We usually book off 30-minute increments to view any given property. If you are walking a larger property, such as a detached home or an acreage, of course, you're going to want to leave a little bit more time than that just to make sure that you're not feeling rushed. I highly recommend private showings, and that means that just your realtor and you get to walk the property so that you feel comfortable. You don't have anyone else on the property while you're there. Hopefully the sellers are gone. They should be gone, but sometimes they like to stick around. In those instances, it's not as comfortable. Obviously, you don't really want to say anything to offend the seller. During a private showing, you really do get a chance to get a good feel for that property, ask any questions that you might have on that property, and get a sense of what it would be like if you were to live in that property. When I take clients out to go on private showings, I usually keep to around 3, maximum 5 properties at one time because they all start to blend together and it becomes overwhelming to the buyer. So if you are going out on a tour, I would recommend to limit it to ideally around 3 homes to view at any given time. That really gives you enough time to take everything in and evaluate each property so that you can choose the one that would best suit you. There's no limit to how many times you can go out and see homes. However, you should narrow that down with your realtor ahead of time so that you're not getting overwhelmed. It's really important to have a clear vision on what you're looking for because we want to eliminate homes that do not work for you as opposed to seeing everything and overwhelming you. And now the market's changed and maybe you're paying more. So it is really important, again, to have a clear vision before going out and seeing any properties. When you are looking at homes, you have to have a realtor present, or the seller's agent can be present if your agent cannot make that particular private showing. However, an agent has to be on the property. You can't go on your own. If there is an open house for the property that you're interested in, your agent does not have to be there, although they should make time to go see that property because they're the ones who are going to be writing the offer on your behalf. But during open houses, one agent is hosting. You're always going to have an agent on the property when you are viewing. So after searching and searching, you have finally found the home that you want to write an offer on. And so I'm going to go over the entire offer process from the time that you write the offer to the time that you get the keys. I'm going to share with you my screen and we have the offer timeline here. What would happen is your real estate agent would prepare the contract of purchase and sale based on your terms and conditions. So things such as price, the dates that you're going to be moving in, and some other items that your real estate agent can talk to you about in more detail. Or if you want to jump on a call, you can do so by clicking the link below. But once the terms and conditions of your offer are agreed upon by both you, the buyer, and the seller, that is an accepted offer. So once everything's been initialed and agreed upon, you have anywhere between 7 to 10 days on average to do your due diligence and make sure that the property you are purchasing is 100% what you want. And also the lender has to approve your financing, because earlier we spoke about, yes, you do have a pre-approval, but that lender still has to see that specific property and they might have an appraiser go through and do any due diligence on their end. For example, if it's a condo building, they want to make sure that that condo building is also in good standing, because if it's not, you might be hit with a special levy or a fee to pay in the foreseeable future. So items like that have to all be verified by the lender before they can officially give you the green light and approve you for that property. So items that you would be taking care of during this 7 to 10 day period include getting a home inspection done, verifying your finances. So your real estate agent will send the accepted offer, the property disclosure statement, and usually the MLS report on that specific property to your mortgage broker. Once your mortgage broker gets those required documents, they can go ahead and start working on your file, and the underwriter would then hopefully approve your financing for that property. We would look at the title search and make sure that the owners and the sellers sellers on title are actually the true owners of the property and that there's no outstanding charges or liens on the home or restricted covenants or easements that might prevent you from doing whatever it is you want to do with that property. The property disclosure statement needs to be looked at. This is a 4 to 6 page document depending on the type of property that the seller fills out, and it asks them a series of questions about that specific property. Some examples might include, are you aware of any oil tanks on the property? Are you aware of any problems with the plumbing, the electric system? Have they done any renovations? If so, were permits taken out? So just general questions about that property so that we can make sure that you're not buying something that you didn't think you were buying. And again, that property disclosure statement is to be sent to the lender so that they can have a look over it as well and make sure that there's no red flags on that property. If you're buying in a strata, so a condo or a townhome, we will also go over the strata documents pertaining to that building. Usually we go over the last 2 years of any meeting minutes. That includes monthly meeting minutes, annual general meeting minutes, and also special general meeting minutes as well. So we want to know exactly what's going on in the building. You also want to look over the depreciation report, which is done by engineers, and they do a full walkthrough of the building, the exterior, interior, parquet, if there is any, and they put together a report that provides you with insight on the building. So for example, what condition is the parquet in? Does it need to be repaired? And if so, how much money is that going to cost? Is there enough in the contingency fund to cover that cost, or should you be expecting to pay a special levy potentially in the foreseeable future? We want to make sure that you're not going to purchase in a building or a complex that has issues in it, because once you move in, you're responsible for paying anything that comes up in that specific complex. And I wrote down septic and well inspection because some properties, even in Langley, are on a septic and well system, and you should definitely get that checked out prior to removing your conditions. So we've got our offer accepted, and now we have taken care of all our due diligence, including these items. And again, you don't have to write in all of these items and do all of those things, but these are the most common ones that we would put into a contract to protect you as the buyer before removing your conditions. If you're satisfied with all of these items and your mortgage broker has approved your file, we can go ahead and remove subjects. And when we do that, we're saying that we're satisfied with all of these items, we're good to go, we're removing those conditions, making that contract now firm. That is the time and point where your deposit is now due. And again, that is roughly 5% of the purchase price. That will be held in your real estate agent's brokerage trust account, and that will go towards the remainder of your down payment come completion day. There's no written rule on how long before you would actually get the keys to your new home. However, generally speaking, you're going to be looking at anywhere between 30 to 90 days, 2 months being the real average time before you can actually take possession of your new home. Of course, if the property is vacant, you can move in 2 weeks if you want to. We just have to give the lawyers enough time to complete their documents and make sure that everything is good to go before you would get the keys. So completion day, I've been saying that a lot, and you might be wondering, well, what does that mean? So completion day is the day that you are the true owner of that property and your mortgage is registered. So you are now paying for your property. Super fun. You should be proud. You're on title. You're the owner. Your mortgage payments have started. It's real. Possession day, it's usually a day or two after, just making sure that your mortgage did register and giving those sellers time to move out of the property before you can get the keys. Adjustment day is usually the same day as possession, and these are when all those little items such as reimbursing sellers for any property taxes that they paid in advance, all those type of little adjustments happen on possession day. And again, that's usually 1 day after completion. I should touch on the newly announced buyer rescission period that was implemented by the government earlier this year. What that is if you don't have any subjects in your offer, so you're going in with a subject-free offer or a cash offer, as you might know them as, you as a buyer now legally have to have 72 hours or 3 days before you can actually provide the seller with your deposit. Again, talk to your real estate agent. It depends what type of market you are purchasing your home in at that time. But if you do go in with a subject-free offer, which is extremely risky to do, especially if you're in a market where you don't have to, you wouldn't be able to purchase that property technically until 3 days after your offer is accepted. The reason being is because the government wanted to give buyers that went in subject-free 72 hours to really reflect and cool off before their deposit was due and the deal was firm. Next, let's talk about what costs are involved in buying a home. So aside from your deposit and your down payment, what are the other costs that are going to come up during the buying process? I did do an in-depth video on this called How Much Does It Cost to Buy a Home in BC? If you want any of these items that I'm going to go over in more detail, I suggest you check out that video, but I will summarize the main costs that you are going to incur at some point throughout your buying experience. I'm going to go over these costs in the order that you will run into them. So first and foremost, we did talk about it earlier, but mortgage default insurance. So if you are putting less than 20% down on a property, you are going to have to purchase mortgage insurance. And that is calculated on a percentage basis that is worked into your mortgage. It is not a separate payment that is due. So if you're putting anywhere from the minimum down payment of 5% up to 19.99%, you will be required to purchase mortgage insurance. And yes, mortgage default insurance is an added cost, but it could be the difference of you buying a property or not if you don't have that 20% down payment available. The larger the down payment, the lower the percentage you'll be paying on mortgage default insurance. This insurance is going to cost you anywhere from around 2.8 to 4%. GST. So in BC, we have GST tax, and when you're purchasing a home, this is a one-time tax that is payable in BC. So if you're buying a brand new home that has never been lived in, for example, a new construction or a pre-sale property, you will be required to pay GST. This is calculated as 5% of the total purchase price, and that's due payable on top of the purchase price at completion. Speak to your accountant, but the other situation where you may run into having to pay 5% GST as a buyer is if a home has been substantially renovated. So the rule right now is that if a home has been renovated to 90% or more of what it used to be at its original time, you may be required to pay GST. Again, ask your accountant for more advice on this as it is a tax. However, these are the situations in BC where you would run into having to come up with an additional 5%. There are some GST rebates out there for first-time home buyers. However, they are kind of sad because the property value has to be $350,000 or less in order for you to get that rebate, and there's partial rebates between $350,000 and $450,000. Again, in the area I service of the Fraser Valley, this is very challenging to find a brand new property or a substantially renovated property within that price range. Appraisals. So a lender may want their own representative to go in and verify the property that you are purchasing. So there's different ways of doing appraisals. They can be online appraisals. I've had drive-by appraisals, or the appraiser might actually be required to go into the property. An appraiser will go in and take some photos, do a walkthrough of the property on the interior and exterior. And this appraisal will cost you anywhere between $300 and $500 depending on the type of property you are purchasing. So this fee would be payable before you would remove your conditions or your subjects. Property survey certificate might be required by your lender, and this would be something you would run into should you be buying a detached property. It is an outline of the actual footprint of the home and the lot that you are buying. These cost anywhere between $20 and $100, and you would have to go to your city or township to purchase this document. During your subject removal period, when you have an accepted offer, you may choose to do a home inspection. Now, these aren't mandatory, but they are strongly recommended. And what this entails is a home inspector doing an overall review of the property that you are interested in purchasing, just to make sure that there aren't any issues with the property that you might run into once you get the keys that you didn't already know about before removing conditions. Some items include the condition of the roof, the hot water tank, the furnace, and the home inspector will also check the appliances and all the seals around the windows and toilets and just make sure that everything is working as we would expect it to. Home inspection runs anywhere between $400 to $1,000 depending on the type of property that you are purchasing. If you're purchasing a condo, you're going to be closer to the $400 to $450 range. Townhomes are around $500 to $550, and detached homes, depending on if they have any secondary shops, they can run upwards of $1,000, but most of the time they're around the $600 range. This is payable to the home inspector at the time of the inspection before removing your conditions and going forward with the property that you're choosing to purchase. Depending on what kind of home you are purchasing, you also want to verify with your real estate agent what kind of services are connected. For example, if you're on a septic system or a well system, you might want to get a septic and a well inspection. And these are different than your home inspection. So the home inspection is just the property, but if you have any other services connected to the home, you have to get a special specialist in to have a look at those specific systems. If there's a hot tub or a pool, again, same thing, you would want to get a specialist to come check that out before removing conditions. Property transfer tax. So that is the big one on the buy side in terms of the fee that you're going to have to pay when you're purchasing your home. Now, property transfer tax is a tax in BC, and it is calculated as 1% of the first $200,000 and 2% on any amount between $200,000 and $2 million. Once you get over the $2 million range, they tax you even more on a percentage basis, but we'll just keep it simple for now, and you can assume that it is 1% of the first $200,000 and 2% of the balance on the purchase price of your property. Now, property transfer tax is due payable on completion, and it is a separate fee. So this one does not get worked into your mortgage, so you need to plan to have that amount put aside and ready to be paid on completion day. So for example, on a $1 million home, the property transfer tax due would be 1% of the first $200,000, which is $2,000, and then 2% on the amount between $200,000 and $1 million, which accounts for another $16,000. So the total property transfer tax due would be $18,000, and again, that's due on completion day. There is some first-time home buyer property transfer tax exemptions, but the home has to be $500,000 or less, and there are partial property transfer tax exemptions between the amount of $500,000 and $525,000. If the home is new construction, the property transfer tax exemption goes up to $750,000, and there's a partial exemption between $750,000 and $800,000. Legal costs. So you need to hire either a notary or a lawyer to do the closing documents, and that's something that's done a few days prior to the completion. Some of the items that a lawyer handles is taking the previous owner off title, putting you on title, and making sure that any charges are taken off the previous mortgage and that it's clean and ready for you to go. They do mortgage filing, title filing, and they do all the adjustments as well. So for example, in BC, we pay property tax on July 1st of every year. If the owner has paid out for the entire year, but you're moving in January, you would have to reimburse that owner for 6 months of those taxes. And the same goes for if you're purchasing in a condo building and the previous owner has already paid out that month's strata fee, then you would have to be reimbursing the seller based on the time that you are moving into that property. So if you're moving in on the 16th of any given month, you would owe that previous seller half of the strata fee back. So these types of adjustments are handled by your lawyer or notary, and they're going to run anywhere from $1,200 up to $1,500. And you pay your lawyer at the time of signing, which again is a few days prior to the completion day. Mortgage penalty payouts. I did go over this a little bit earlier, but just one thing to verify is if you already own a home and you're buying your next home, please make sure what the fine print is on the mortgage of your previous home so that you're not surprised come closing day when you get hit with a bill for breaking your fixed term mortgage. Moving costs. If you're like me and you're over 30, you might want to think about hiring movers, and movers can range anywhere from $1,000, upwards of $5,000. It really depends on how much contents you're moving into that property and also the distance between your old home and your new home. Again, for a more detailed list on some other smaller items that I'm just not going to include for simplicity of this video, you can check out my previous video on how much does it actually cost to buy a home in BC. It's not really a cost, but the other dollar amount that you should have prepared ahead of time and be aware about is the deposit, which we spoke about is roughly 5% of the purchase price, and you're also going to need to have the remainder of your down payment be accessible by the time of completion. So I think that about covers it for going over what's involved in the buying process, everything from timeline, the cost involved, and how to properly prepare and set yourself up for a successful home purchase. One thing that is always changing is the market. So again, I can't emphasize this enough, but really make sure you hire a real estate agent that has their finger on the pulse when it comes to market conditions, because this is going to be huge when you go to write offers. If you guys found any value in this video, I would appreciate if you hit the like and subscribe button to help me get it out to more people like you who might be wondering how to go about purchasing their first home or their next home. And if you guys want a digital copy of my buyer's guide or any of the handouts that I have available, please feel free to reach out. If you guys have any questions about the real estate market and you want to book a call to discuss how to get started in more detail, click the link below and book a 30-minute call with me and we can talk about this in more detail. Thanks for watching. I really hope that you guys got value from this video, and I will talk to you soon.